Yeah, hello and welcome to another update video about MATIC. So MATIC ideally holds the 58 cent level in order to keep the overall bullish scenario alive. It could form one more low. It certainly doesn't need one after this strong move down. As I mentioned to you, sometimes these last 4-5 patterns do not form when we have a rapid sell-off like this because they are hidden in the structure. MATIC could really do now with a rally. I mean, ideally the low is in. I just can't confirm it until we really get a sustained break. First of all, above 75 cents. That's only the initial resistance, yeah. And then we have the next resistance level at 95.4 cents. So let's see if we can get above 75, which at the moment seems plausible. Currently working on that already. And then the bulls need to attack the next level at 95.4 cents, and then $1.09 is the next one, and then we could indeed be in the breakout of a larger third wave rally. So the support area is clear. We expect a turnaround here. I mean, there isn't much more space anyway. You can never rule out a wick below the support region, okay, and then a rally. That's something to consider. That's what is a problem if you set the stop below the box. Okay, so it's important to understand that from an Elliott wave point of view, the bullish thesis isn't invalidated technically until we break below sort of 49 cents, which is the September 23 low. But it is the case that typically after a break or a sustained break below the 78.6 retracement will already tell us that invalidation is very, very likely. So at the moment, there's no change. Still keep the overall bullish perspective alive. The third wave should take us to $2 plus. We can measure that based on the assumption that a low might already be in. It looks better and better, but I just need more price data from an analysis point of view to confirm that. The parameters are clear. Bullish thesis remains preferred scenario as long as we're holding 58 cents. Okay, we need to avoid a sustained break below that level. First target then for the third wave, based on the latest priced data, would be the $1.76 level. So this is where the third wave should get to as a first ideal target. Fourth wave could then give us a pullback to $1.30, and the fifth wave can send us here to $2.13 or $2.43. But then this is really only the first ideal target for a third. Can always extend higher. I prefer to get to 213 or 243 to be honest. But the third would then unfold as a 5-wave pattern. It's just simply not enough price data there yet to suggest that we have bottomed or not. We'll see how it develops today. I'll keep you updated in the next few days. If you want additional updates, feel free to check out the Gold membership. If there is anything exciting happening, then considering my capacity, I will obviously always update as soon as possible. The wave 1 of 3 would typically reach either the 38.2 or the 61.8 extension. So, okay, the 38.2 would be here 80 cents. So that's another level to watch. Not so relevant. More relevant is the 61.8 extension. But because that's basically at this sort of 95, 96 cent level anyway, it's already highlighted on the chart as resistance. So I'll leave it as it is. Maybe I'll actually put it onto the chart and we have it actually visible. Because that's sort of, let's say, the first level where we would normally expect, the first larger level where we would normally expect a wave 1 to finish. So that means if it can form 5 waves to that level, a corrective pullback could be the next setup. I mean, this here is a setup, in my opinion, still active. Reward to risk ratio is still pretty good on the MATIC chart. But yeah, for now, it would be really good for MATIC if the last low could hold. But as the chart shows, one more low cannot be ruled out. I would not call that yet a substantial break above micro resistance, but it looks as if it wants to break. It certainly doesn't get rejected unless we get a strong rejection now, like after the stock market open. Can sometimes happen around that time. There's a bit of volatility that comes in, and then we could get a bit of a rejection there. But yeah, I mean, if we continue to move higher today, the next target and the next fib level is the 95, 96 cent range. Above that, $1.09, and then sort of here, the X-wave high around $1.30. This is then again typically a target for a third of a third wave. So essentially it would, in an ideal world, be this 1, 2, 3, 4, 5. This is sort of how it would very idealized look like. And then what I'll do, I'll take out the microstructure here because it gets a bit messy now. Yeah, as you can see, it could do with one more low possibly. So I'm not confirming the low is in. I'll leave it open a little bit, but I just want to take the detailed count out because it doesn't really have much predictive value anyway. It just tells us where the resistance area should sit. And this is here, and the break above resistance, which we haven't achieved yet. It's exactly at the 50% fib level. Could open the door then to an unfolding wave 1. I mean, until we really get a break above all these levels, there's a potential for this correction to extend and everything. But really, MATIC shouldn't really extend. If it does, it will morph into a different structure. And then unfortunately, this structure here is going to change. And the overall bullish thesis, well, might not be invalidated, but might be just, the structure will change. And then maybe the bullish breakout might be significantly delayed. So I'll keep you updated anyway about any changes. So I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.